A great American ham heist. Do you know how pork got political, personal, and peculiarly global, farmer? This video covers the latest updates on how they're turning bacon into geopolitics. The rise of the bacon empire. Smithfield Foods was born in 1936 in Smithfield, Virginia, a town so proud of its ham that state law once required it to be made from peanut-fed hogs raised within town limits. By 2006, Smithfield was processing 27 million pigs annually, producing 6 billion pounds of pork and 4.7 billion gallons of manure. The company's Tar Heel NC plant became the largest pork processing facility in the world, slaughtering 32,000 pigs a day. Smithfield's growth was fueled by acquiring over 40 companies, including Murphy Family Farms and Premium Standard Farms, consolidating control over 10 to 15% of U.S. hog production. In 2013, Smithfield was acquired by WH Group, a Chinese conglomerate, for $4.7 billion, marking the largest Chinese acquisition of a U.S. company. The deal included 146,000 acres of farmland, making WH Group one of the largest foreign owners of U.S. farmland. Critics raised alarms about food security, genetic data transfer, and foreign influence over American agriculture. Smithfield's pork exports to China surged until tariffs hit 125%, cutting off access and forcing the company to pivot to pet food and pharmaceuticals. The farmer's fork in the road. In 2023, Smithfield closed 35 hog farms in Missouri and terminated 26 contracts in Utah, citing economic pressures. Smithfield's vertical integration meant it controlled everything from piglet to packaging, leaving independent farmers sidelined. Farmers were left with empty barns, unpaid loans, and no clear path forward, while Smithfield restructured for profitability. The latest Sizzle and the hidden scandals. Smithfield settled price-fixing lawsuits totaling to $100 million, accused of artificially limiting pork supply to inflate prices. In Minnesota, Smithfield was fined $2 million for employing miners in hazardous conditions. Environmental watchdogs accused Smithfield of being the third-largest source of water pollution in the U.S., with 66 violations in 2019 alone. In 2024, Smithfield sold off 1,371 acres of Missouri farmland with a deed restriction, no more hogs allowed. The pork market today. Smithfield's IPO in 2025 raised $940 million, valuing the company at $10.7 billion. Pork prices are forecast to rise to $69 per hundredweight, but tariffs, labor shortages, and PRS virus outbreaks continue to challenge the industry. Smithfield is downsizing its hog production from 17.6 million in 2019 to 11.5 million in 2025, aiming to reduce commodity risk. Voices from the heartland farmers and lawmakers are calling for transparency in foreign land ownership, especially near military bases. The USDA's Farm Security Action Plan aims to monitor Chinese-owned farmland and protect U.S. food systems from agrottourism. Meanwhile, Smithfield insists it's still an American company at heart, despite being wholly owned by WH Group. Closing line. Did you know? Smithfield's IPO made Wall Street sizzle, but farm soil got shaky? In 2025, Smithfield Foods stepped off the farm and onto Wall Street with a $940 million IPO, skyrocketing its valuation to $10.7 billion. But here's the twist. While stocks surged, the company quietly sold off land and scaled back hog production. Instead of raising pigs on their own farms, Smithfield now partners with others, cutting costs while focusing on high-margin packaged meats. And guess what? Or a bite of a global saga involving farmland, foreign policy, and a pig named Sir Oinkslot who may be plotting a comeback from a silo in Missouri. Big money investors like Millennium Management LLC and Zimmer Partners LP still bet millions on Smithfield stock, confident in its leaner business model. Smithfield's land sales might look like a red flag, but they rate part of a bigger strategy. So, while it might look like downsizing on the surface, it's actually a strategic makeover, a piggy pivot, if you will. Smithfield has been reducing its internal hog production since 2019, selling off sow farms in North Carolina, Missouri, and Utah while taking partial stakes in partner companies to maintain supply. This shift allows them to cut costs, streamline operations, and focus more on packaged meats in automation areas with higher margins and growth potential. Despite these asset sales, institutional investors are still buying it. So next time you bite into ABLT, ask yourself, Is this bacon just breakfast? Over the past 24 months, firms like Zimmer Partners LP and Millennium Management LLC have poured hundreds of millions into Smithfield stock. That kind of confidence suggests investors see long-term value, especially after the company's $940 million IPO and $10.7 billion valuation. If Smithfield continues to boost profitability and streamline operations, the stock could rise, especially if demand for pork and packaged meats holds strong. So stay curious, because even bacon comes with a backstory. While Smithfield's selling land might seem like downsizing, it's more of a strategic pivot.